Hi everyone, this is Nuresh Mirani from nurestech.co.in. Today we'll take a quick check on the Nifty in terms of how it is placed technically and how a steep sloping trend line breakdowns are a little too tricky in the short term to analyze. So this is the trend line which most analysts and people would be looking at as to how it has given a breakdown. But it would be tough to stick on this trend line forever. If we were to stick on this trend line, we would be at a much so if I were to take it exactly and try to fit it to all the bottoms and say these are all the bottoms where it almost caught on the trend line, a little bit of a tweaking here and there to just try to match up all the bottoms. So this was the momentum trend line. If you were to stay on this trend line by end of December, you would be at 14,500. So that was not going to be the speed forever. So whenever such trend lines break, one needs to look at the last swing lows as the important points for reversal or supports. So the last swing low in this case is 11,111 and another swing low is at 10,880. So those are the 2 points where we should find support, and only a move below those will be an indication of a major trend change, because we cannot continue at this speed forever. So this is more like a speed bump rather than a trend change, because what happens is when such moves happen, people start talking about a V fall and back to the previous lows and whatnot. So simply put, we will look at 11,110 and 10,900 for a view onto the changing in terms of a longer term trend change. So steep sloping trend lines, that's why are tricky. So for example, if you were to put a trend line here in the same way, there were 3 bottoms on that trend line roughly, and then it breaks down, but it continues to hold on to the last swing low. So same way, the last major such recovery was in 2017 after demonetization, and you would notice the same structure wherein there are 3 bottoms on this trend line, then it breaks, goes sideways, does not break the previous swing low. Same way, if you were to look at this is where there are 3 bottoms, this is where it breaks but does not break the swing lows. Same way, you would notice a similar break here wherein it looks like a clear-cut trend line break, and you would notice the same, the last swing lows held on. So, and then finally, when do we get a trend change majorly over a period of time is when those trend lines get broken, which happened sometime later out here, and then we got into a much bigger downtrend. Same way, if you were to look at 2016, this is where you could call a similar trend break out here, but you found quite a few bottoms around this zones, and this is where you got a trend change. So this zone is where you can either go sideways or again start a new rally. Same way, a similar quick reversal from the lows was in 2014. Say 2013, this is where you look at the trend lines after a major bottom. Same way, if you were to use a very steep sloping trend line, this would look like a breakdown. This would look like a breakdown, but this is just an indication of a correction, because you cannot continue at the same speed, and if you notice, the last swing lows don't break. But people would expect back to the start of the bull market. Same way in 2009, this day would look like a breakdown. If I were to join all the 3 trend lines, this would look like a breakdown, and then we get a 20% circuit. Same way going forward, if I were to extend it, this would look like a breakdown, but it is just that we cannot continue at this speed. Same way you would see it here, and you would notice the same, the last swing lows hold on. So where do you expect in the same way, if you were to look at the current market context, you would watch out for 11,100 and 10,900 as support. So that is where we may get into a range, and only a break below those is where you look at a much deeper correction. So simply put, do not look at steep sloping trend lines as an indication of a V-shaped fall all the time. It may happen once in a while like this, but it was not a very steep sloping one. But this was a correction of a much bigger time frame, and a very sloping trend line also broke meaningfully. So simply put, we are placed at Nifty at 11,100 and 10,880 is the zone, which is where we would look out for supports, and we may get into a sideways zone. So I would not be overtly bearish as of now. It's just a pause, and whenever this happens, this is generally the time where there is new sectors which tend to break out. We've covered media on our website, which looks interesting. IT is very interesting. We have been looking at TCS and some other names also. Same way previously, when a little bit of a dip happened, metals did very well, which we covered. PSUs flopped out, wherein the breakout did not play, but you got an exit right at the entry points. So going forward, we believe there could be sector rotation. So that's the simple view. Do not become overtly bearish. So we may get into a range with a upper band at 11,800. Now that's a little too upper band for the short term, but that's the fact. Okay, we may get into a, most probably into a sideways or a boring range. That view would change if we break 10,880 in quick time. Thanks a lot.